What's up, everyone? Just gonna do some Nasdaq breakdowns essentially. So just looking at price obviously here from a higher time perspective. So I've already laid out the chart. I've basically brought everything out I think is important in terms of the price action. Essentially I'm just gonna break it down from essentially higher time frame to a lower time frame and showing what's essentially has transpired in the Nasdaq. So I'll just go from a week. So this is the only real level I have noted here on Nas. As you can see, we have a weekly volume imbalance there. Okay, now let's go back to a daily. So I'm just gonna no. It looks like a lot. Right, it does, but I've broken it down individually into each chart, and obviously I'll show you exactly what's going on. So points of reference here. So after price is priced in its low here, we found our dealing range low, our dealing range high. Obviously an area where I noted here we have a volume imbalance, so essentially that's an area that's been yet to be filled by buy side. So when price is trading down here, that was obviously still left open, and essentially that's going to be a draw on liquidity, so to say, and the market's going to want to seek up into that. You can see right above this candle here we have a little bit of equal highs there, so essentially it's buy side liquidity that hadn't been tagged essentially from down here, that was still up there resting. As you can see, we have equal lows resting right there, and let me just show you here. So from a daily time frame perspective, so this is a swing high right here, this is a swing low. So with the Fibonacci tool, essentially I've measured that range there from swing high to swing low, and you can see anything under this level here is all at a discount. So essentially price when it's trading around this area here from 50% to the 79% retracement level, that's all being bought at discount. So the market's going to seek obviously to be hedged in at those type of levels. You don't want to be buying at a premium or selling at a discount. Do you know, that's not how it works. So essentially, as you can see, that weekly volume imbalance right there. So let me just zoom in here for you. Price played around here, tapped here, one last little run there, that little run back down. So this is obviously on a daily perspective, so you've got your open, high, low, close. Okay, so the low of that, as I was trading into that, essentially, no, we have our open, high, low, close. So opened here, formed our high, got our low, close, essentially. And as price retraced into that weekly volume imbalance, that would have actually been an entry point from a higher time frame perspective right there. So as the market was printing into that level there, buy simply goes straight up after. Now, so you can see another little volume imbalance here. So when price was trading in that area there, that was still open, so the market is obviously looking to seek above that. So I'm going to break this down now into a 4-hour chart. As you can see, it's obviously coming a lot cleaner here now. So we have that range obviously from the swing high to swing low. This is given essentially profit targets of where the market's looking to want to seek. So obviously you can see 0.5 standard deviations has been tagged there. One standard deviation is yet to be tagged. Obviously if it goes any higher, expecting probably 1.5 standard deviations just above the high over here slightly. And let me just show you here. So this here, it's essentially all one big liquidity pill. See the way it's just all like back and forth, back and forth, back and forth, back and forth. It's basically a pill of liquidity resting there. So when obviously price is trading down here, noting that level, you can see here we have a fair value gap from that low of that candle to the high of that one. Price came up in here. Smart money reversal right inside of that fair value gap there to seek obviously these lows that were resting over here. and as you can see, it tagged it here, smashed down under this low here. Let me just get that there, just to make it more clean. Now this is what I mean about the discount levels. So see the way it's just playing around all of this, it's just playing around these levels. So that's nice. And yeah, obviously with our smart money reversal here, as price was retracing, should I say, into that fair value gap and offering distribution there. Obviously in this level here, the market's after switching into a buy program, obviously to allow the market to seek up to fill in that fair value gap, take out the buy stops essentially. I'm just going to remove that there for a sec. That's buy stops right there, relative equal highs essentially, as well as a fair value gap that has yet to be unfilled. So the market's obviously looking to seek up into that. I actually didn't notice this on the daily chart, but you see hit the high of this candle there, well, right between that blue line there and that one there. Like essentially, if you just see here, like, I wouldn't even know what necessarily, would it be like a volume imbalance or a type, yeah, I'd say it's like a volume imbalance or like a form of, I wouldn't even know what to call it. Probably buy side imbalance, sell side inefficiency. It's going to act like, I mean, the support and resistance. So let me just show you here on the 4 hour, the high of that obviously level there, from there to there, it just traded nicely into that right here. Obviously on a 4 hour time frame as well, we have a fair value gap right here. There's an entry point there that I'll show. There's a couple of different entry points here that I'll show. But anyways, we have our sell side imbalance, buy side inefficiency. So this here, essentially, it's in the name. It's a sell side imbalance, buy side inefficiency. So it's inefficient in the aspect that buy side hasn't filled it in, essentially. And these lines I've noted here, 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 and here, I've separated all of that into quadrants, so to say. So essentially, that's your 50% of it. If you measure here to the top of that range, that gives you your 50% there of that range, and same case obviously there. So it gives us, like, it breaks it up, the sell side imbalance, into quadrants, and as you can see, it hit that one nicely there and filled it and closed off the day obviously for yesterday. I'm going to break this down now into a 1 hour. You'll see here those Fibonacci levels playing off, key in here, tap into it, trades off. Where does it return? I'm going to give that 4. So at the top of that candle's there. It's a bullish order block. Not using, essentially it's 2 bullish order blocks, but I'm using the beefier candle. It's got more of the volume attached to it. So when an order block is tagged, essentially it's a change in the state of delivery. So as you can see here, it essentially changed its state of delivery and seeked buy side, hence turned into a buy program. So there's your order block there. You have a volume imbalance here that was filled right there, so that was filled there. So the low of that candle is 14219.75, and the fuck is the open? What did I say? 14975. 20975, and then fucking hell, the close on it 20950. So just about filled it. Just short. Well, essentially there. And obviously you can see, like, here, this was all just sell side waiting to be filled in. See, it's just one big, there's no buy side offered there. And obviously the market's repriced through all of that, cleaned all that up. The paintbrush analogy, so up, down, up, down, up, down, efficiency, an efficient market. And there's that fair value gap playing around there. As you can see, after this level was tagged, that was a profit target. Obviously the liquidity pool resting all there, price ran through that, wiped all that out. We have a fair value gap here, and as you can see here, essentially when that happened there and that high was taken and it retraced back down here, that was still buy side liquidity waiting to be tagged, with the draw expecting up into that sell side imbalance, buy side inefficiency. And as you can see here, we have our mitigation block right there, so price mitigate right there, bought up in that little fair value gap here as the candle was trading down into that entry point there, buy straight up in there. I'm going to break it down into a 15-minute chart just to be cleaner. As you can see on NAS, so this was Friday's trading overnight, just at about just past the London session, just short of New York. You can see we have a rejection block there. Price tapped into that just by a little bit right there, as you can see. Came up off of that. There's another obviously entry point on the 15-minute time frame from that blue line I was showing you there, and obviously down there that inefficiency point, essentially, that if you had a bought when that was trading down there, that would have been an entry point right there. Now I'm going to break it. We have our breakaway gap here, so essentially this is an order block on a lower time frame. I'll show you now, but if you were to buy at that order block, your stop loss essentially should have been right there, or at least the halfway point, with the intention that that's not going to fill and that's going to stay open, because that's a breakaway gap. There's a liquidity pool resting there in a lower time frame. I'll just show you now, I suppose, 5 minute. Let's see, this is where you'll see it. So starting off on Friday's trading, let me just do this here. Yeah. Essentially that fair value gap over here that I noted on the hourly, you can see price traded up into that, tapped it, came down, we'll retrace back up, tap it once more, came down, didn't quite break the low, retrace back up into a sell side imbalance, buy side inefficiency, seeking lower. But what you'll notice here, we have equal lows resting right there. So as the market was trading up into this, essentially here, I'm going to just use that order block there. So it's probably, see the way it's the bigger body, not that one. That one, it's the beefier candle. So that's the one I'm going for. Obviously price came down, took out the equal lows. Once it tagged that rejection block, started to obviously buy off of that level. You can see here we have our market structure shift. So that was our confirmation that shift is strict. The market structure has shifted to buy side right there, and the price trading through that. Is there anything else I need to outline the 5 minute? Yeah, you can see a order block here. Right there was tapped straight up off of that. We have a buy side imbalance, sell side inefficiency here. Consequent encroachment, which is essentially the 50% point of that range there, from that price high to that low on that candle. 50% of that entry point there. Another one here. Obviously cleaning up nicely to the close of the day. And as you can see, obviously the quadrants have separated on that sell side imbalance right there. So the 50% line, that line, there's our 50%. And then to get that quadrant, you just do essentially the same thing with this one. And as you can see, that gives us our second quadrant. But another one. And as you can see, I tapped it there, and just shy of hitting that hit on at a higher time frame though. I'm going to break this down now. There's actually our liquidity pill that I was talking about here. So essentially this, but I don't want the letters to not be able to be seen, so this is essentially what I mean by the liquidity pill. Rest there, okay, so that's that, what I was aiming at. You can see a fair value gap right there, distribution, comes back up, redistribution, redistribution, and then terminus down here. There's another entry point where you're off the fair value gap, so there. Second leg of distribution there. That's that. And I'm going to break this down now into a 1 minute time frame so you can see even more. So Friday's trading tapped into the rejection block just before the New York kills on. As you can see, we have an order block right there, just tapped it, slash fair value gap. So there's a fair value gap as well as the order block there. The market structure shift here, so price traded through that, came back down. That's the official confirmation of the market structure shift, because after it came back up, it tagged that, it didn't proceed to go down. It then broke this high, essentially, and obviously seeked higher prices. Same type of thing with this line here that I outlined there and there on that daily chart. Same similar thing, but on a 1 minute time frame, like a fair value gap of sorts. From there to there, price came in, tapped it. Let me just straighten that up. Price came in, filled it, bought off of that level, retraced back down into it, bought off, or propelled up, should I say. There's that breakaway gap, that bullish order block here. That would have probably been the entry point right there, as price traded right into that. Now this is right during our kill zone silver bullet hour. So as you can see, chop, 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 comes up, taps that down and trades off of that, takes out the highs here. Essentially price then trades up higher. So even though it was very sloppy in that silver bullet hour, the trade was there. As you can see, there's our halfway point there now on Nasdaq, consequent encroachment of that range. In here you have that there as recapitalization, so it's recapitalizing this buy orders inside of that down close candle, or that up close candle should I say. So it's recapitalizing them orders there, taking out equal highs, resting here right above that level, equal highs, came up, bought away, and yeah, just price just ran clean for the rest of the day. Right up, there's another entry point there. Another one right there, and that would have been just about in the lunch hour. That's another entry point here, and it's kind of not sloppy, but just back and forth, 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 but slowly making its way up. Do you know what I mean? Into this range here. So look, I know what I've discussed there is fucking lots, and it is a lot, but if you understand what I'm talking about and you understand smart money, and it's just kind of binding it all together, creating like a language. Now obviously if you don't know the language, it's fucking complicated as shit. Still is complicated, it never will not be complicated. It's one of these things, like you just have to keep practicing, and eventually you'll just start noticing what I'm seeing here. Like I started off trading, I didn't have a fucking clue what I was looking at, you know what I mean? It's one of these things where obviously practice is perfect. You know, you're not going to be a fucking genius at the start. So obviously I hope you enjoyed that breakdown there from our daily time frame all the way down to our 1 minute, outlining obviously everything there. As always, I'd really appreciate it if you did enjoy the video and found it insightful. If you could please like and subscribe. Also, if you just want to hit up my Instagram, TikTok, other social media accounts, much obliged. Really appreciate it. If you do enjoy the value I'm obviously providing with the video, just like and subscribe, and yeah, till next time, safe trading. Okay.